Good morning, everyone. Welcome to the On Time, On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. Today, we're going to talk about a little bit of validation with Kiplinger's magazine. I'm a big fan. I've taken this magazine since I was a kid, back when it was, I think, Changing Times, if I remember correctly. My parents got me started on it because they took it and I started reading it. But I've had this for years. And what we're going to talk about today is the article, "Do you have too much cash?" And I have this conversation all the time. How much cash is too much cash? And largely it's a personal decision. I tell everybody the same thing, is that you have a sleep well at night number that you have in mind, that if it goes below that, i.e. say your number is 15 to 25,000, if it goes below it, then you're kind of worried that you don't have quite enough cash on hand. If it goes above that, then you're worried about you should really be putting that cash to work in other places. For me, that's kind of 15 and 25. For you, it may be 50 and 100,000. Or if you're maybe younger, it's 500 to 1,000, or whatever that number is for you. It's going to be different. And of course, if you're married, you're going to need to have that conversation with your spouse as to what is the right number. But as far as having too much cash in the bank, we are leaning towards a potential large inflationary period, which is the difference now than why haven't we talked about this for the past 10 years? Well, the difference is, what if there is inflation? Then obviously money in the bank, we're looking at, possibly a 5% raise in
Morgan Stanley
COLA
delivering
this
a
year.
message
Let
to
me get rid of
employees
that
not
noise in the
vaccinated for COVID. They
background
will be
there.
barred.
As far as, potential 5% increase across the board. So if that's the sort of inflation we're getting, then of course money in the bank has a direct 5% purchasing power decrease due to inflation. So that's why it's been a bad place to have too much money sitting, and it's only getting worse or going to get exaggerated depending on the amount of inflation we have. So that's what we're going to have. We're also going to talk about how banks make money, which, if you know how they make money, you can simply do it on your own, or you hire somebody like me that comes in and just does it for you for a small fee, because money sitting in the bank is literally making them a ton of money through net interest margin, which we'll go into once we get through the market open today. As far as the trades, do have a couple longs that I like out there. Xpeng Motors, you've probably heard me talk about them, Chinese EV maker, in the news, going public overseas. And then also GSK is spinning off a consumer healthcare portion of their company, which their stock's moving higher on that news. I don't have the insight as to exactly what's going on there, but that is the story taking those names higher. Then there's a couple shorts out there, but I really kind of like the move higher based off of the huge green day we had yesterday, and kind of a green hangover, if you will, into today. As far as thanks, Burner, for your comment. I appreciate that. As far as going into today, so again, the futures are in the green and going higher. All right, if you're catching us on replay, thank you so much for checking us out. Make sure you subscribe and hit the notifications bell. If you want to join us live, what you don't see is a chat window and a Q&A window to ask your questions. So with that, let's go ahead and get started. Unintentionally went back to the old intro, so I'll make sure I grab the right one for tomorrow. Here's our lineup card for today. Is make sure you have your Q&A window set up and your chat window set up correctly and visible, so you can see the pithy comments coming in from the folks of like Burner and Apex that are generally chiming in. Feel free to chime in as well if you are in part of the silent crowd. Standard disclaimer applies that this is a financial education presentation. You have to do your own due diligence for acting upon anything you hear this morning. Full disclaimers available at ototnow.com. All right, Wednesday, June 23rd, almost halfway through the year. So what happens towards the end of June? Well, money managers like myself and those that are more have to chase the quarterly report sort of thing, you do see a lot of volatility rolling in towards the end of a quarter. You also see what I call window dressing, is where if somebody sat out of the hottest stock in the quarter, you pick it. Torch has been on fire, TRCH. That's where you'll see a lot of mutual fund managers buy it at the end of the quarter and make it look like they've had it all quarter, when really all they did was just buy it so they could publish it as one of their top 10 holdings for the quarter. So anyhow, a lot of financial shenanigans that go on. The longer I'm in the business, the more I realize why I went into the business is to avoid all those shenanigans and just do straightforward money management for folks without any of the stuff that goes on behind the scenes. Fully transparent, if you will. All right, our objectives today: grow our money, protect our money, protect our money, and live off our money. Today, we're kind of talking about growing our money, and cash in the bank. They do pay you, sure. I mean, most accounts you can get a couple of pennies for having some money with them, but they don't really pay you what they used to, And I don't want to be the older person saying the world isn't like what it used to. Well, that's, to me, that's just cry it out, old person, right? You don't care what it used to be. It's what it is. And how do you take advantage of the scenario that is, right? When folks ask me about my investing strategy, I'm like, well, it depends on market conditions. It has been heavy in tech. It has been, get money out of bank account and put into municipal bonds that are tax-free, or investment grade bonds, eking out that 4.5%, 5%. And then I get a grown, well, I want the CD I had from 1982 that paid 7%. And I'm like, yeah, me too, buddy. Right. But it doesn't exist. So let's stop wishing for it. So that's why I like this article that came out. There's two things that came out in what I call the cruiser validation episode, or not episode, but but the magazine. What do they call them? Edition. Anyhow, there's these too much cash in the bank account, and then get this, Kiplinger's actually ran an article saying 1 year until retirement, consider keeping your mortgage. Gasp, right? So wishing for the days of old, like all of us when we were kids, or excuse me, if you're my age, I should say, since there's different ages in the group, was to pay off your home going into retirement so you don't have that dreaded house payment. Well, living is an expense, right? Period. I mean, it just costs money to live, whether you rent or whether you own, you're paying yourself in that case. But in a situation where interest rates have been so low for over a decade, that, yeah, it has not made sense to pay off your mortgage, and it hasn't made sense for a long time. So I've been saying that for about 10 years now, and I'm glad Kiplinger's is finally catching up. What I do have to caveat this with is, if rates rise, which I don't think is going to happen anytime soon, but if they would magically go back to 3, 4, 5%, all of the things I'm saying right now would now again be wrong. Of course, you would want to pay off your mortgage if it was sitting there at anything above 4%. If you have a 4% mortgage right now, it's probably because either you have credit concerns and you weren't able to get lower, or you just been lazy and you haven't looked at refinancing in the past decade, when everybody else in the world has at least once. But either way, it doesn't matter. It's a math problem, right? So you don't worry about, you take advantage of the conditions that are not what you want them to be. So that's what we're going to talk about. So I was glad to see Kiplinger's catch up with the past decade and say, yeah, it's okay to hold a mortgage going into your retirement. It's okay to pass away with a mortgage, right? You'll pass on the equity in the home down to whoever you distribute your wealth to. So anyhow, some things to consider there. All right, question today: what is net interest margin? We'll get back into that. Flow today: long, short, open, short, long. I am on a different setup. I have a new computer, but we're working through some concerns with that. So this is the setup I'm going to be at for a couple days, and then of course I'm going to be on this particular MacBook when I'm on the road here for volleyball for national championships, which is coming up starting Friday, starting this weekend really, but we travel Friday afternoon. Okay. Market review, headline review. We'll come back. We'll take a look at JP Morgan is the best in breed bank out there. Jamie Dimon is the longest sitting financial CEO. He was in the chair through the global financial crisis, 2007 through 2009. Really pretty smart individual, has played his cards right for the most part, and a great company to invest in. Bank of America is kind of the not necessarily best of breed, but it certainly is cheap. And then Goldman Sachs is kind of your best of breed when you get across the to investment banking sort of thing. So I like JPM. I hold it myself. It's in many portfolios. That is a buy and hold long-term sort of position. All right. Short-term trades will execute the market open. Contingencies and academic resources are standard. Let's go over to take a look at TD Ameritrade Think Pipes. Which again, we don't have the full display that we normally have, but we'll zoom out here and take a look at the market recently. So we had the big sell-off on, let's see, that was Friday, and then we had a bounce Monday, and then we had a pretty significant bounce yesterday as well. It was all good. So when you really focus in on the 5-day, which is right here, you can see significant bounce back from that dip we had. So no real concerns with the market, and I do think we power higher from here. And the next bad news is going to be taxes likely, and I don't think anybody's saying anything until they get the infrastructure bill passed. So that's what I predict for the market, but most of our stuff is just long-term hold anyway. All right, and here's how we'll get set up. We'll have the two longs in there. I'll be able to see both of those with XPEV and GSK as far as our two holdings we're going to take a look at. All right, coming back to CNBC.com. Here we go. Refresh this real quick for the futures. You can see everything's in the green there, not by a huge amount, but in the green there. I just saw that Gary Kelly's going to step down as CEO of Southwest. All right. He's been in the chair a long time. I don't know exactly how much that is. All right, let's go ahead and take a look at around the world. Europe, mixed. Asia, pretty well mixed as well. Nice bounce in Hong Kong there. Bonds still holding below 1.5% on the 10-year. Hey, how'd you do that? I see Predator there grabbed that and pasted it back in. So anyhow, well done. Thank you. Yeah, XPEV. Yep, got it. XPV and GSK for the longs out there. Thanks for doing that for me. All right, oil holding above 70, and gold and silver up a little bit fractionally. Bitcoin bounced significantly, and you can kind of see down, if you look down here, Kathy Wood buying, 1 million shares of the GBTC. We were in that not too long ago, but we dropped out of it when Bitcoin went below 30, and obviously it's back up to almost 35 now. So, roller coaster, Bitcoin, don't know the end of the movie. I'm sitting this one out for right now while it goes through its big controversial period and finding itself, if you will. All right, as far as other headlines out there, GSK spinoff was a big headline. There it is. Steep change in growth as it does its split there. Warren Buffett giving away $4.1 billion, halfway to giving away all his money, which he's pledged to do to philanthropy. He also left the board of the Bill and Melinda Gates Foundation. I wondered if that was political or if that was going to happen anyway. I mean, he's aging, so he doesn't necessarily need to be involved in everything. All right, that is it as far as the headlines. Let's take a look at JP Morgan real quick. All right, here's a chart on JP Morgan. So kind of a straight run basically after the election from 110 up to 170. It's come into 150. You can buy it here. It does have a dividend. It's not going to make you rich, but 2.4% while you wait. And again, when you talk about horses and jockeys, as far as an investing analogy, the horse being the company, the jockey being the CEO, Jamie Dimon's one of the best out there, right? You really just aren't going to find a better jockey. He's one of the top 10 in the world. So pretty good place to have your money. All right, let's go get set up for the open. We have 30 seconds to go. I will be right back. Give me just a second. Good morning, everyone. Welcome to the On Time, On Target play of the day. We have 15 seconds to the market open. You're looking at a TD Ameritrade ThinkPipes screen with 3 screens. They're all 1-minute charts for the SPY, XPEV, and GSK. Zooming in here, S&P's up here so you can see how the futures are trending. Here's the opening bell. All right, so futures were up earlier, about even right now. XPEV is up on the news. They're gapping up. You can see that 5% gapping up on the news of their IPO. So I like that best. Looking for about a 40-cent stop. Get zoomed in here a little bit more. And then GSK spun off a consumer unit. So again, if XPEV just runs up on us here, then we will back it up. So, and take a look at GSK secondary, not primary. All right, so looking at XPEV first, right here in the middle of your screen. Low of the day is 41, call it 41.90. 30 cents would be 42.20, which it's at right now. I'm not willing to grab it right here, though. That'd be pretty aggressive. I'd like to see it come in just a bit before we grab it. It may or may not, right? So looking over, so while we're waiting on that, let's look at GSK. Just set the low of the day down here. We'll call it, looks like we got 430. Again, 40-cent stop. I would go a tighter stop on a GSK. Let's do a 25-cent stop. So 430 for the low and 40.55 for the entry point. Market turnaround, first 2 minutes are in the green, so looking pretty good. Just make a note for myself here. 40.30 and 40.55 for that entry point. This is not hit yet, so we're not in that trade. I will let you know if we are. Looking back over here to XPEV, it's already run up a couple percent. So unless you grabbed it right away, it is not that you can't enter it here. All right, market continues to power higher. I'm going to take XPEV down and check our shorts real quick. Again, waiting for that entry point in GSK. ABCL was a short, so I'll put that in the middle pane here. Down 6.5%. $0.20, 40 cents. Yeah, can't really enter that there. And then the other one is ATOS. Atasa Therapeutics. These are both biopharma, or excuse me, pharma companies. Super aggressive. You could enter this one here. You'd have to go, you go right at 680 and enter at 670 to the downside. I'm not going to take that. Okay, ours hit for GSK, so there's our entry at 40.55. So draw that out to the left. There's our entry point. Remember your stops down here at 40.30. We're into this trade now. Here's your arrow long. That can be pretty as normal. It's hard to draw on the MacBook. Then I'll draw your stops out and target for you. All right, so we got in with the 25-cent stop. So 40.80 is our first R unit. Let's see if I can back out here. And then 41.05 is the second R, and 41.30 is the exit. So I'm not going to be able to draw that here. Just have that in mind that 41.30 is your exit. We'll zoom back in so you can monitor the trade. We're still at the entry point, so you can take it here if you would like. All right, so we're in that trade. We'll come back to train, pull that up on another screen, and I want to put the other original long back in there, XPEV. See if it's still screaming higher. So here's why you can't take that once we miss the entry point there. Excuse me. Can't hop in and take it here, nor would I take it as secondary. There's just too much selling going on in that name. So it's kind of like something we don't know. All right, let's switch out of day trading mode and go back into longer term mode and see what's going on. All right, Clover Health, that's a meme stock name, is up 13%. Nikola 5%. TQLB is a spec name, same with CLIS. PLDR is a LiDAR company. Tesla up to 2.4%. We haven't talked about Tesla in a while. More curious than anything to see where it's at, see if it's right around 600. And no, gosh, it's been moving up. So it was at 600, then went to 620 and paused. Now it's at 640. So a lot of positivity there as far as Tesla is concerned. NEO up. I don't have XPEV outright. I use NEO instead for my Chinese EV exposure. All right, let's take a look at the downside. Coupang Software down to 1.7. Revive Therapeutics, Sony, Wendy's, Dominion, Starbucks selling off a little bit. Not too many names in the green, so mostly a lot of green out there. Let's check our trade one last time. That is not the right trade. There we go. So hanging out about a minus half an R there. So just be patient on that, and we will check back here in a minute. All right, let's go to net interest margin, and let me talk about that real quick about how banks make their money. And it's over here. All right, so I like the analogy of you have a small town and there's 10,000 people in the town. There's one McDonald's, there's a baby Walmart, and there's 7 banks, right? So how is it possible we could have all those banks sitting there and keeping the lights on and paying all their employees when you have this, net interest margin thing is how they do it. So it is the difference basically what they pay out to you versus what they bring in. So again, you take your money to the bank, and maybe you wrote down all of your serial numbers on your hundos, and you took them into the bank, and then you go back, 3 months later and expect to get those same serial numbers back. That is not true. It'd be highly unlikely that you would get any of your original serial numbers back, right? So they take your money in, and they literally put if you bring them actual dollars, they put that in the vault in those bags and everything else that's back there. But most of what they do is through the electronic ledger, right? So they turn your actual dollars, your notes, your Federal Reserve notes, and take those into their vaults, and they credit your account. And then same thing if they turn around and chop a loan out to somebody at 5%, say, or 3% if it's a mortgage, 8% if it's a signature loan, 5% for construction loans, 12% if somebody just needs that has bad credit, whatever it is. That's an electronic ledger where they credit the person's bank account, or they set the structure up, to where they buy the car. They say if you get a car loan, they electronically make that right first, and then they debit from there as the folks make payments. But as far as the actual moving of cash, a lot of that just sits back in the vault, and of course it's not tied to you, right? It's to whoever wants it. I do have a friend that's a banker. I did a podcast episode on this not too long ago. Actually, it was about a year ago now, about how banks work. And actually, if we're both bankers in the same town, even though we're competitors, if I'm getting low on cash, I can send a courier to your bank and get cash and kind of keep us level between the town as far as our cash levels. And then the Federal Reserve is the one that comes out, the government that comes out. And if we place, an order for the Federal Reserve to bring us some cash, then that bumps up those minimum levels that we need to have on hand. In case somebody walks in and needs $50,000 for their poker game, I'd be interested to know where that poker game is, because I would want to either watch or participate. But most people don't need that amount of cash if they're doing normal activities, if you will. All right, back to net interest margin. There's a video if you want it, but basically it's the returns versus expenses. So this is what they're making as the bank. This is what they're paying you. If you learn how to do this on your own, then basically by investing either in municipal bonds, if you only want to make a couple percent, if you want to take a little more risk, you go up into corporate bonds, and you can make that 4.5% to 5% on your own. That is what the bank is doing with their money. It's just that simple. There is some skill involved. So either get smart on it if you're doing it yourself, or hire somebody that's smart on this. Not many people do individual bonds like I do, but it's not complex. It's just, you need to know what you're doing is all. So anyhow, that's the difference there. And again, that's why you can afford to have all these banks in these small towns. So what affects net interest margin? People will say interest rates do. It's almost a pass through, right? So if interest rates go up, the bank has to pay out CDs at a higher rate. So really both those numbers move higher, what they're taking in and what they're paying out. So I wouldn't necessarily buy that the banks make more money in an inflationary environment because they have to pay it back out, but you'll certainly hear people talk about that. I just don't know that that actually is true. All right, let's check back on our trade. It wasn't looking good there for a second. We are right at that 430 level, so we'll just go ahead and call it a bust, even though it looks like it might be a penny away from it. But busted trade for today. And with that, we'll be back tomorrow. Yeah, that hit it, 430. So yeah, with that, we'll be back with you guys tomorrow. You guys have a good one. Bye.